Welcome, brothers and sisters. This is your Elliot Wave Master Course Intermediate Stage Part 2. In this stage, we're going to learn about parallel channel lines. We're going to learn about the basic calculations of an impulse, basic calculations of ABC structure, right? This is a very, very important video. If you understand this video, it's more than enough. You can decode the analysis of any market structure by yourself. Now, why are we using calculations for impulses and ABC? Obviously, we want to know when the market can turn, from which price level it is expected to turn. Yes, everything has a limit, everything has a correction, market can go this. So for this, we'll be using your Fibonacci extension tool, right? And we will be using our Fibonacci retracement tool. These are the two tools you can see in the tool section. You can find it, right? These are basic tools. I think everyone must be aware of it. We will also see how do we apply our parallel channel lines to identify waves in the market. How I use it now, textbook method, like I keep saying, textbook method, I'm not interested to teach you guys. You can learn it on your own if you want to. There's something apart from the textbook which I have learned and which I use. So that is what I want to share with you guys. All right. How do we use parallel channel lines to identify waves? And we can also use them for subwaves. We'll combine all of that towards the end of the video and study your entire structure. Now, let's begin with basic calculations of an impulse wave. If you see your impulse wave, your 1, 2, 3, 4, 5, our aim is to find, again, our aim is to find a low risk setup. Okay, in the market, we want to find a low risk setup. Now, Elliott wave analysts, the biggest mistake they make is if they find out some region or area where the market can turn, okay, when the market can turn, how you should think here. Very simple. You're looking for a low risk setup. Okay. Now, when you find a region where a market can likely turn, what happens is people before the market turns, many amateur traders, they try to book or take the opposite direction, reversal position in the market. And if the market somehow makes this scenario, in case it does not reverse and goes further down, so what happens is that you're trapped, you make a big loss in the market, right? So it's very, very important while calculating this. It's a high probability setup. That is what you're looking for, or you're looking for a low risk setup. So let the market come, let the market decide what it wants to do. If it reverses from here, only then you confirm. So confirmation is a very, very important aspect for your waves calculation. Example, here, if the market is dropping and you have calculated some level, okay, you expect market to turn. Market makes a small rise and then falls down further, right? So you have to be careful when you know that market is in a wave 2. You want to catch the bottom of wave 3 and you want to exactly sell the top. Let the market give you confirmation, yes, it has entered wave 3. Okay, that is when you know this entire next wave 4, wave 5, everything is yours. So you must have some confirmations for that. In your advanced concepts, we will have indicators which will tell us in advance that yes, wave 3 is possible, and if previous swing high is crossed, how we can easily know whether it's a wave 3 or just a correction in the market. So there are many methods in advanced concepts. Again, it is not necessary that you go to the advanced concepts. This intermediate stage is more than enough for you to gather evidence in the market to understand the market structure. Okay, so let's begin. Your wave 1. Your wave 1, usually what it does is it tries to break the previous trend. So the previous trend is going on, a swing high and swing low is made. Your wave 1 usually tries to reach the previous swing high here, or in this case, we're talking about a bullish trend. Same thing, you can reverse it for a bearish trend, no problem. Okay, so same, all the rules apply for the bearish trend as well. For this example, we're taking a bullish trend. Okay, bullish impulse. So previous swing for the previous trend, the previous swing high, price of wave 1 can come to the starting point of this previous swing, or it can break through it. Okay, this is very likely in case of wave 1. Wave 1 identification, I'll show you in different examples. Sometimes it is difficult because market will not show enough market structure for you to conclude that this is wave one. Many will think, oh, this is just sell on rise opportunity. Okay. So in the beginning, wave one is the part where it's okay if you want to leave. Many professionals, they decide to leave wave one and wave two. They play for the game of wave three. Okay. That's when they know how to, they have patience built. So there's something which I cannot teach you, which is patience. They have the patience built to wait for wave one to form and wave two to form. Okay. This is the best practice. It's a low risk setup. Then you'll have guarantee that this is an impulse in the making. So wave one, it is most likely to touch the previous swing. Okay, we will see examples where you will understand, yes, sometimes wave one you cannot identify clearly in the market. Sometimes the market will directly gap up in form of wave three. Then what do we do? Right? We'll understand that later in this part. But for now, you understand that wave one, there is no specific calculation for how much wave one can go. All right. After you understand the internal structure of wave one, then it will be easy. Okay. Internal structure of wave one you have understood, and then you go for playing wave two. Now wave two. Wave two, when you draw your Fibonacci retracement of your wave one, you know the rules of an impulse already. If you have seen the beginner stage, the rules of an impulse, right? So ideally, we want wave two to come near your 50 to 60% zone. The characteristic of wave two is to create panic among your small parties, meaning your retail traders, your dumb money. If it creates some panic, only then your big boys, the big money, the smart money will enter into longs of wave three. So they are accumulating in this phase. In this phase of wave two, they are accumulating longs, right? So ideally, it can come all the way to your 67%, 78%, 61%, 50%. It can go as much as it wants. So you have to study wave two separately. Okay. Now, wave two, we know that it does not have to come all the way. It can make what? It can make ABC structure. It can make ABC flat. What are the different types of flat? There are three types of flat. So, meaning flat means it's a time correction. Market will go sideways, right? Market will go sideways. There's again WXY, then WXYXZ. This will look like a pole and flat type pattern. Okay. So most cases, your wave two can form ABC. Then most cases, your wave two forms your flat structures. So in case it's an ABC, you can expect 38 to 50% drop minimum. Okay, in wave two. If it is a flat structure, you can expect between your 23 to 38. You expect at least wave two to show some retracement up to 23.6% retracement, at least that much. Okay, that is very, very important that price shows wave two. Then you can consider, yes, it's a valid correction, at least 23 minimum. Okay, like again, I said, if it's a flat correction, a bigger range, you can expect 38%. Or if it is an A, B, C structure, you can expect 50% to 60%, right? That will be best because it's a golden ratio, right? Now, after you finish, so it is very important you study again the internal structure of wave two. Okay. After your wave two is finished, okay, after your wave two is finished, you will go for a big wave three. In this case, what you have to do is the normal textbook method suggests that wave three can go. This is your Fibonacci extension tool. Let me show you again. Fibonacci. I have put it 0.1 and then 2. Okay. Fibonacci extension tool. So what are we calculating? We are calculating how much distance can wave three go. In your textbook, what it says is usually that wave three can come to 1.618%. Okay, that's very good, no problem. But sometimes you will see you cannot calculate wave three. Okay, sometimes you will see there is no specific method. Now, through experience, I'm telling you, out of textbook, do not calculate the distance of wave three. It is the best practice not to calculate how far wave three can go. What you must do, you must focus on two things here in wave three. You must focus on wave 3.3 and wave 3.4. Okay. How to calculate 3.4? You will understand when you understand wave 3, wave 4, how to calculate it. Wave 3.4. Okay, once this wave 3.4 is finished, or wave 3.3, then we'll get a 3.4 wave. After 3.4, you will understand your wave 3.5 is going to come, meaning this third wave is going to get over soon. That is when you want to calculate the length of wave 3.5. Till then, it is very good that you just blindly leave your wave 3. Through best practice, I'm telling you, do not put a limit on where wave 3 can go. Usually what happens is, many people, they think that wave 3 can go to 1.618 or 2.618. So what they do is they hold on to something till there, they expect it to go there. So sometimes if the market turns from 1.5 level itself, if the market turns back down from 1.5 level, they will still hold it, assuming that market is going up. So market later on, it might go for a deeper fall. They don't know what to do then. They think that wave 3 is failed. They think Elliot wave is failed. No, the market conditions, underlying market conditions, is very, very important. Along with that, every stock or instrument or index or commodity, gold, silver, Bitcoin, Nifty, Bank Nifty, Reliance, HDFC, whatever you take, everything has their own behavior pattern. The more you study on the chart, you will understand, yes, in some stock, suppose let's say Axis Bank, in that stock, usually market extends beyond your 2 points, wave 3 extends beyond 1.6 and reaches 2.618. Okay, that is what you must understand. Now, Fibonacci extension and retracement is a very basic tool. I think everyone must know it, and I'm not sharing the settings here. It's very common. You can even Google and find out how to apply your settings in your Fibonacci retracement and extension tool. Okay, so here, very important, wave 3, never calculate the end of wave 3, number 1. Okay, in wave 3, after you find wave 3.3, identify it, and 3.4, wave 3 and 3.4, then only you will think of calculating the end of wave 3, because you have wave 3.5. Now, how do I calculate wave 3.4, 3.5? I will tell you. Okay, it is the same as calculating wave 4 and wave 5. Same rules, because your wave 3 itself is an impulsive structure internally. Okay, same rules apply. So like I said, general idea, do not calculate the end of wave 3. First, wait for 3.3 to form, then 3.4 wave to form, then you put the calculation for wave 3 with the help of wave 3.5. Okay, this I'll tell you how to calculate 4 and 5. Now, you have understood a basic idea of wave 3. Yes, it generally tries to reach here. Okay, generally tries, but do not keep a fixed mindset thinking that, oh yes, it has to reach there. Don't keep a fixed mindset. Sometimes some stocks or some instrument can surprise you. Okay, so like I said, study only for wave 3.3 and 3.4, and after that you calculate the wave 3. Now, wave 4. Wave 4, there are two methods which I use to calculate other than your textbook method. I use one, Fibonacci retracement of wave 3 to the levels of what, 50 to 38% of wave 3 as one. Next, after that, you can also keep a full retracement of the entire wave from 0 point, that 38 to 50%. So there are two methods for wave 4. You can calculate your using 38 to 50% of wave 3, right? 38 to 50% of wave 3, or you can use 38 to 50% retracement of the entire wave. Now, what do I use mostly? Now, let me tell you. Now, you understood a general region where wave 4 must come to. Okay, what do I use mostly in calculation of main wave, this entire main wave of wave 4? I usually tend to take the full wave. Okay, I usually try to calculate the full wave. In case I want to calculate wave 3.4, if I want to calculate wave 3.4, I will keep wave 3.3 to 3, starting of wave 3, to calculate 3.4 in the region of 38 to 50%. Okay, now one question I usually get is, sir, if wave 4 is the form of triangle or flat correction, what do we do? So in that case, sometimes price of wave 4 will not reach your 38%. Most cases it will reach, okay. But if it's flat correction or sideways correction triangle, what do we do then? That time you have to study the internal structure only. That is why I told you, in the impulsive structure, wave 4 is the most dangerous wave, right? So it can form anything. So generally we want to look at your wave 3.8 and 3.5, 0.5 and 3.8 retracement to calculate a wave 4. If you are calculating internal structure of wave 3 ka wave 4, or again 1.4 or 5.4 again, okay, you take the starting of that wave, right, to the recent swing high to calculate wave 4. Meaning here you will take 3.3 to 0 point of wave 3, okay. Then you will try to calculate wave 3.4. Then wave 3.5 you will calculate. Now how to calculate wave 5th? Any fifth, it can be internal or main wave. So fifth wave usually comes in what? A diagonal or an impulse. In this case, to calculate the main fifth wave or any fifth wave, what I do is I take extension of the entire wave so far. Extension, Fibonacci extensions of the entire wave from your 0.34. Okay, I take the extension, and the minimum requirement for me to see a fifth wave is your 3.8 extension. Minimum requirement. After this, if this is crossed, if this is touched, I would suggest I mostly complete my booking or most of the positions. I leave the rest for trailing. Okay, in this fifth wave, it can extend up to your 0.78 also. Okay, in fifth wave extensions, you will see sometimes maybe some fast up move or whatever, you can see the price reach to 0.78 also. This is an extension case. This, if price reaches, if fifth wave gets extended to 0.78, it will most likely get retraced fully. Most likely fifth wave will get retraced fully. Okay, now simple question, can I apply this rule for 3.5? Yes, you can apply the same rule for wave 3.5. So what you will do in this case, you will take wave 3.3, you will calculate wave 3.4, you will put the same Fibonacci extensions, right? You'll put the same Fibonacci extensions to calculate wave 3.5. Now come back to the same rule of wave 3 I told you. Do not calculate the end of wave 3. Let wave 3.3 finish. Look for wave 3.4, which is your 38 to 50% retracement of this wave, right? And then you calculate wave 3.3. Now, similarly, in your wave 5, what you do is you let wave 5 go, calculate 5.3, 5.4, and then assume that you are calculating 5.5. Here, if you are able to calculate 5.5, you will know the exact top in the market. Okay, so what are you looking for? A region of probability. Okay, so just to recap of impulse wave, wave 2, you have to study the internal structure, right? We are expecting in case of ABC structure it to reach your 50% to 61.8 retracement level. Okay, in case it's a flat correction like this sideways momentum, it will not reach. You will look for at least 23% retracement, that is your 0.3. Okay, this is where you want to see your correction in the market, 0.236 and 38. Okay, wave 2, if it's a flat move. And now wave 3, what are you going to do? You are not going to calculate the full end of wave 3 in start itself. You're going to wait for 3.3 and 3.4, right? Then you will calculate wave 3.5. Okay, keep that in mind. Now, how do we calculate 3.4? You will take retracement of the entire wave 3. You will look for, from the level of 3.3 high, you will look for 38 to 50%. Again, same rules apply for wave 4. If it's a sideways momentum, it can make anything. It can make diagonal, triangle, sideways, flat. It can make a deep correction, zigzag, right? So ideal case, you want to look for 3.8 and 38.2% and 0.5% retracement. In advanced concepts, it does not matter whether whatever structures it make, wave 4 has to break some indicator for us. An indicator is guide us for wave 4 calculation. Exact using multiple time frames, we will identify exact wave 4, right? So then you will know exactly wave 5 whether it's getting completed or not here. Then you can play for wave 4, then you can play for wave 5. Same thing here in your wave 4, your ABC structure. Now let's look at the basics of an ABC structure. So in textbook, all of you already know that many times they have already said wave C should be equal to wave A, right? Length of wave C should be equal to wave A. I have already told you, do not put that kind of thought in the market. Okay, sometimes in some instruments, wave C can terminate at 78% also. In some instruments, wave C can terminate at 78% also. Most cases, in generally most cases, wave C comes to 1x. Okay. Sometimes even wave C can extend to your 123x. Very, very rare cases, it can also go to 168. Okay. What will this depend on now? This will entirely depend on the internal structure of wave C. This will depend on the internal structure of wave C. Okay. Now, if wave C in the same thing, you don't want to calculate every wave in wave C. It is enough if you calculate C.3 and C.4. Okay. So meaning you will wait for C.1, C.2, C.3 to form. Then you will calculate C.4. How? 38 to 50% retracement of the entire move. Okay. It is C.4, not 3.4. It is C.4. Okay. It is C.4. Then after you find C.4, you will put the extension to calculate your C.5. So this is the last leg of the move, you know. So where C.5 can end, you will see, and then you will play for the next move. That is how you want. If you want to catch exact reversal, you will calculate the internal wave of C, and you can also calculate your extension of A, B, C level. Okay. So I hope this is quite clear now. You can calculate both. Where they both are meeting nicely, that is a very good point to watch. Now, point to repeat here again, do not fix your mind suggesting that C has to be equal to A. In some cases, some instruments, it can even end at 0.78. So wave C can also end at 0.78 extension. I have seen it so many times in different instruments. So every instrument has its different behavior. Okay. So it's very important that you study your instrument, whichever script or whichever chart you're practicing, study what is happening repeatedly and keep an open mind. Do not fix your mind. This is a dynamic nature of the waves. Okay. Now, how do I use price channels? How do I use price channels? A very simple concept. So price channels, what usually is taught in the market is that inside the price channel, if your wave is starting from here, what you need to do, put a price channel so you can expect wave 1, wave 2, wave 3, wave 4, wave 5, right? This is the general idea of what happens in the market, right? So wave 1, wave 2, wave 3, wave 4, wave 5, and then you will go for a fall in the market. So what I'm trying to teach you here is outside the textbook, sometimes what happens is your wave 3, so what first basic rule of price channel, let me show you. The basic rule of a price channel is very simple. You need 3 touch points. Again, I'm repeating 3 touch points, meaning you need 0. If you are starting 0.1 and 2, wave 1, wave 2, this is 3 points. Similarly, if you want to calculate wave 4, previous 3 touch points are what? 3, 2, and 1. Okay. If you want to calculate wave 5, what is the previous touch points? 4, 3, 2. the last 3 points. Okay, this is what we need in the market. Okay, very simple. Again, in ABC, if you want to calculate wave C, you need 0 point A and B. So 3 touch points. You cannot calculate channel for wave 2 because previous touch points are not there. 1 and 0 only are there. Before that, there's nothing. Okay, very simple. So we have price channel line for wave 3. Price channel line, if you draw like this, sometimes you will see that what have I done? I have connected 0 0.2 point. Again, let me show you properly. 0 point and 2 point. Okay. Then I have extended this towards 1. Okay. So like textbook shows that price will reject from here to form 4 and 5. This does not happen. This does not happen most of the cases. Wave 3 will break this upper channel line. Very simply, it will break it. Okay. This will tell you for sure that yes, market is in wave 3. Okay. Then what you do, you have to shift the wave dynamics. You have to shift the wave dynamics to learn your internal structure of wave 3. Like this, you will put it. You will learn the internal structure of wave 3 like this. Finally, I'll explain in another example how do you calculate all this. Now, just for example, you have taken first what you did, you have understood, yes, market is in wave 3. Again, in your advanced concepts, you are going to learn here in this price channel, you will understand, okay, yes, wave 3 has broken the price, we are in wave 3. But in advanced concepts, you will learn earlier itself that yes, market is going into wave 3. We want to calculate from the beginning. We don't want to calculate later on. Okay. In this, I'll show you how do you calculate it using price channels. Okay. So now you have understood that wave 3 is here. When your this thing breaks your wave 3 channel, you will understand, yes, wave 3 is completed. So what are we using price channels for? We are using it for confirmation basis that yes, a wave is completed. Okay. Now wave 4 it's completed. Now I want to we are in wave 4. Example, we are in now, we have broken this. Now we are in wave 4. I want to calculate the price channel for this. So what do I need? I need your previous 3 touch points. So 1, 3, and 2. So most cases what happens is your wave 4 will most likely come and break the low of your channel line. Most cases. In this case, what I've connected 1 and 3. I've extended to wave 2. In most cases, you will see that your price channel line will break. Okay, your price channel line will break. That will tell you guarantee, yes, this is wave 4, right? But now question is very simple. If market in wave 4 goes sideways or triangle, what do we do? In that case, what will happen? Your price channel will act like this. Okay, it will go sideways and then it will either take support here or it will break. Okay, slightly. That's what will happen here. So price channel, if it's most likely to break after wave 3, then it is your wave 4. Okay. Now after wave 4, I want to see wave 5. What do I see here? Very simple. What is the previous 3 touch points? Wave 4, wave 3, wave 2. So I'll connect them. So I'll connect wave 2 and 4 first. Wave 2 and wave 4. Then I'll extend it to wave 3. Okay. Very simple, nothing complicated here. What happens here is that after this, you will see, you will expect for wave 5. Now wave 5, usually what happens, like I said, sometimes wave 5 gets extended to whatever news may be. Usually wave 5, 5.3 will break the middle channel line, come back, and then we will see it rotate in the lower half of the channel line. This is the best case scenario for wave 5. It will spin in the lower half of this channel, entire channel. It will be in the lower half. In very rare cases, it will break. So again, do not put fixed mindset that market will not cross this middle channel line. Do not keep that. It can be dynamic. So what do you have to do? You have to study the internals of wave 5. Okay. So what you can do, you can draw this big channel line, and then for every internal wave, you can draw another channel line like this to understand. So when the internal waves channel line is broken on wave 5, this is your first indication, yes, we are in a reversal. Then later when price comes and breaks this lower channel line, it will guarantee tell you, yes, market is gone, finished. Okay, I'll explain this in more detail in another example now. So price channel lines are dynamic. You have to keep shifting them, to not keep a fixed mindset. In a regular ABC, what is expected is you have to calculate price channel for wave C, right? So here connect your wave B and 0. And again, let me tell you, do not keep a fixed mindset that it cannot break. It can reach to the low of this and also slightly break. Okay, but it will not sustain much after it breaks. It will turn back inside market. Okay, that is your wave A, B, C. So for you can only calculate for C. Reason is because if you can't calculate for A, because there are no previous 3 touch points for A before A. It's only 0 point here. We are a new structure of the market. So they're only started from here and 0 A, B. Then you can calculate for C. But you can calculate in a smaller other fashion. You can calculate channel line for A separately. You can calculate if this is over or not, right? You can calculate it like this separately. So for this, let me just change the color. This might be a little confusing to many of you. Many of you are new to this concept, but you'll understand it when I share the example. Question is now, why does market do this? Why are we using parallel channel lines? Some people have studied GAN, some people have studied geometry, some of you know. 45 degrees and 90 degrees is a very important form of your market. In this case, what happens is 45 degrees and 90 degrees. When price is moving in 45 degrees, some angle like this, its correction is expected to be in 90 degrees to that movement. Okay. Now in astro, if you're studying, you know that it is very important, 90 and 45 degrees. If you know GAN, you know 90 degrees angle, 40 degrees angle, all these are very, very important. So they usually come in form of squares. So GAN usually says time and price square, right? So they come in forms of squares. Okay. So if a channel line, if a trend is going in some direction, right, it does not have to be again 60 degree, but again you will understand it later when you modify it. Here, if price is traveling, its correction will be in its form of 90 degrees. Okay, this is a strong correction. Now weak correction means it will try and go like this, but your correction will start like this. It will switch to another. This itself is one form of a square. Okay, if you see, it's a form of a square. These are multiple squares here, different squares in a rotated angle. This is what is your price channel theory actually, real. Then when price goes again, it will go in 90 degrees. Okay, this is a real price channel theory using your GAN methods also. Geometry, sacred geometry, ancient geometry, whatever you want to call it. Okay, this is very important. Keep that in mind. Now let's quickly look at an example of subwaves in the market. Right, in subwaves, very important. Like I said, we want to calculate the big waves and small waves both. So when we are in wave 1, what we can do is we can draw a channel line for wave 1. Okay, when you draw this channel line, you will understand, yes, here we are drawing a channel line wave 5, and you can see it has broken at this point. So it has given you an idea that yes, wave 1 is finished. Okay, what you will do is you will draw a counter parallel channel line for this. When wave 2 is going on, you will see wave A, wave 2.A, 2.B, 2.C going on. Okay, what you need to do is when you're expecting reversal in the market, you can draw wave for 2.C. Now again, I told you already, it is not necessary that C wave exactly stays in the price channel. It can break also. It can break it. In that case, what you can do is, if you're expecting end of this second wave, you can draw a parallel channel line for the impulsive structure of this. Okay, you can draw parallel channel for this 2.C alone, and when it breaks, here like this. When it breaks, you can understand, yes, wave 3 is going to start. So for safe players, what you can do, you can draw this wave 2 parallel channel line, and you can draw both this one also for entire wave 2. So in this case, what happens here, you can see first time wave 3, the new wave has broken your wave 2 point C channel line. So here are the two channel lines, 2 point C and wave 2 fully. Okay, 2 point C channel line has been broken here. Then midpoint of your wave 2 has been broken. So this is very clearly that there is a new wave started here at this point. Okay, when your wave 2 entirely is broken, entire channel line, price can come sometimes to retest it. Okay, so both confirmations are here for us. What? Your wave 2 channel line, your channel parallel channel lines, and your Fibonacci retracement levels. You have expected some zone where market can come and turn. Okay, and then you are using what? Your extension. You're calculating wave C length here. What do we know for wave C? It can be C equal to A, or we'll study the inside of wave C here. Okay, so you have three confirmations here to calculate your wave 2. Now, after this, what you're doing, you are trying to calculate wave 3. Like you already know, Fibonacci we are not using to calculate wave 3. We want to first find wave 3.3 in the market. Okay, we want to first find wave 3.3 in the market. So what can you do? You can extend using your parallel channel line first thing. So in this wave 3, it started from here, right? So we have started this as 0 point. Okay, 3.1, 3.2. So better I'll mark it like this for you guys. Just give me 1 second. Okay. So this is internal structure of wave 3. Usually this is the biggest wave. You will see that this is the internal structure of wave 3. Here, what do we know? We know that wave 3 can break your channel line here. It can go extend above this. Okay, this is your 3.3 wave, even entire wave 3. So both confirmations here are what? That your entire big wave has broken the channel line, also your minor inside small one, both of them have broken the channel line. Okay, this is definitely a very strong up move. It has to be wave 3.3 in the market. So you can remove this if you want to and study this. We are calculating now wave 3.3. So you will wait for what? You will wait for 3.3 to finish. You can also put it like this separately for wave 3.3. It's up to you how you fashion to put it like this. You can put separately. Instead looking at the structure, you will see that wave 3.3 will break again. This will be your 3.4. First indication market is going for 3.4. Next step, what you will do? You will mark your calculation for wave 3.4. What do we know? Fibonacci calculations. We know that it can reach up to 38% on 50% zone of wave 3.4. You will calculate from the starting of wave 3. Okay, very, very simple. You have calculated wave 3.4. Now, what next? After calculating 3.4, you know what to do. You have to calculate wave 3.5. That is when you will know, yes, the market is going to end. So you have put your Fibonacci, levels, extension levels. You're expecting wave 5 to get completed. So what you can do, other step is to put your channel line. Now you're calculating for wave 5. So you have to check the previous 3 touch points, 2, 5, so 2, 4, and 3. Okay. Here you can see that price here is trying to reach this top. Okay. Usually it does not break. And most of the cases, even in a pump scenario, it won't break. I repeat again, very, very rarely that market will make the wave 3.5 or any wave 5 break the upper channel line. Okay, that is very, very rare. Now we know few things here. We know the calculation of how to calculate wave 5. We know how to calculate using parallel channel line of wave 5. We know how to calculate parallel channel line of entire wave here. So three methods we can calculate your wave 3.5. Now next we go on to the wave 3.4. 3.4, very simple. First, our mind should directly calculate your level using Fibonacci. 3.4 level, we have drawn your Fibonacci. We are expecting two things, it to come at least till the level of 38% of wave 3, 30 to 50%, or till the full length, full wavelength of 38%. So sometimes you will see price will come to 38% level. Sometimes you will see price will go to 38% of the entire wave 3. My preference is to use this as your wave 3, meaning at least see the wave come to your full length, 38% full length, 38% of the full length. This is when wave 4 is making a regular ABC or WXYZ or WXY, whatever. Okay, a dip. This is price correction. Okay, this is called price correction. How do we put the channel line here? Very simple. You can put the channel line for the full wave like this, or you can calculate channel for each separate waves, meaning here there's one wave, you can calculate it like this. Okay, A wave 4.A is finished. Now you want to calculate for 4.B. Similarly, draw a parallel channel line for 4.B. Okay, we can draw a parallel channel line for 4.B. Now 4.B is finished. I want to calculate for 4.C. So 4.C is impulsive wave. So you will wait for 4.1, 4.2, sorry, 4.C.1. So that is meaning, what is 4.C.1? It means it is in the 4 points. Okay, let me show you again. 4.C. So wave 4.C.1, meaning we are in wave 4. Inside wave 4, we are in C wave. Inside C wave, we are in the first part, C.1. Okay, this is 4.C.1. Very, very simple. Okay, so here, just to declutter, let me clear the chart. Very, very simple here. As soon as you have expected your Fibonacci calculations, one is your 38 to 50% zone. Next, you can use your wave C calculation, which is your approximately 1x or a little more than that. That is your wave C calculation for your wave 4. So you have C calculation, you have Fibonacci retracement level, and then you have parallel channel lines. So all three confirmations you have. Okay, once this breaks, again what to do? A safe trader can look for confirmation using a full parallel channel line, meaning you can take it like this. Now, yeah, use like this. Why 3 touch points we're using? Again, what is the touch points? So you're calculating the next wave, right? So what is the next wave before that? What are the three touch points? This part, and this part. So we connected these three, right? So here, when your C wave is completed, you can look for the middle channel line confirmation. Okay, and then you can also look for your usual wave C trend line. So when both are broken, you will have a good guarantee that yes, wave C is completed here. Wave 4.C, we are going for wave 5. The last step, again, wave 5 is very simple. You know extension rules for wave 5. It can go, minimum requirement for wave 5 is to go to 3.8 extension. That is minimum requirement. So you will take the entire wave, right? You will put it like that. Minimum requirement is 3.8. After that, you will calculate the internal structure. Okay. Minimum, again, let me repeat, requirement is for it to reach 3.8. After that, you will calculate the structure. Simple, same rules again here, nothing complicated. Now, since this is the last wave, you can draw something like this. So here you have confirmation of wave 5.3, drop 5.4, usual, again, you will calculate 38% of this entire move, right? So if it reaches 38%, well and good, but you already know the rules of wave 1, wave 2, wave 3, wave 4, it should not touch your wave 1 region. So again, if it touches, it will become diagonal pattern. Okay, so if this is an impulsive pattern, wave 3, wave 4, wave 5 completed. Now, confirmation of this wave 5 completed. We know after wave 5, we are going for a very big dip in the market, right? We have wave 5 confirmation, meaning this has to break once. Next, safe player. Take the entire wave, full wave. Well, previous the 3 touch points of wave after wave 5 is what? Wave 4, wave 3, wave 2. So currently we are in wave 5. We want to calculate the end whether or not wave 5 is completed. So we need to check the parallel channel line of the entire thing, right? So here, first confirmation is your big. So your first, let me see. Let me remove the middle channel line here so that it's not confusing. Here you can see clearly that wave 5, when it breaks, it will break your this channel line. Okay, this is your wave 5 channel line, and now this is your big wave channel line, the entire impulse wave. When these two break, a safe player knows, yes, the market has finished its move. Okay, this is for safe player. Now, aggressive player, after wave 5 breaks, you know, when this breaks itself, your wave 5 is finished. Okay, the wave 5 parallel channel line, if it breaks, you know it's finished. Now, a very, very aggressive player, very, very aggressive player, if you know, yes, market is moving in wave 5.5, you can also draw a parallel channel line for wave 5.5. This is very aggressive player. So how you look at it for multiple confirmations is your wish. Okay, how you look at it for multiple confirmations is your wish. So 5.5 channel has broken, wave 5 channel has broken, right? And then entire impulse channel has broken. Now all three channels are broken. Then if you are standing on the opposite direction of this, meaning if you're still trying to buy, then your account also will be broken. Simple. Okay, very, very simple, guys. So I have told you how parallel channel lines are used. I have told you how you calculate your impulse waves and your correction waves. After this is very simple. You can just calculate the ABC after the move comes. So ABC rules apply for this, but now question is very, very simple. In live market, can we use this? And the next question is, when ABC, we are talking about ABC in wave 4. We know wave 4 can make triangles. It can make, you know, sideways pattern as flat patterns, irregular, expanded flat, you know, all these kind of patterns. So we will see all these patterns calculation one by one in different parts. But first, you must understand the basic of calculations, which you have been covered in this video. Okay, so I hope this is the most important video. If you don't understand this, go back and watch it again. All right, I'll see you in the next part where we'll discuss your impulse wave calculations on the chart.